You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, speaking today with my friend Brian Leni of JuniorStockReview.com. Brian, welcome back onto the show, and thanks for joining me. You've joined me a couple times last year with our chats with Rick Gruhl, but this time I'd like just your thoughts. And let's start with what's going on geopolitically and how that's affecting the commodity sector. So with NATO's war against Russia and the whole Russia-Ukraine conflict, we're seeing oil spike. We're seeing palladium spike, we're seeing nickel spike, even silver and gold have risen significantly. Nickel spiking as much as 60% in the last day, which is quite insane. So I'm seeing a lot on social media about the opportunities that are out there in commodities and how this could spark a super cycle in commodities. But I know how you look at things. You're an engineer, you analyze both sides of it. So could you talk to me about some of the risks that you see for investors out there as a result of what's occurring?
Thanks for having me, Bill. Yeah, I definitely see two sides to the current situation. There's definitely an opportunity when you see metal prices rise. You know, obviously that flows down into the junior companies, and there's obvious upside potential. But what often gets missed is the downside, and you know the reasons why those metal prices are spiking, and kind of how that kind of trickles into the rest of the global financial system and market in general. You know, the sanctions against the Russians have big consequences when it comes to commodities and, you know, the metals and oil. And you're seeing exactly what happens when you cut those off or potentially cut those off from the rest of the world. And you bring up nickel's price action has been crazy. I thought we were going to see higher nickel prices, but I didn't think we were going to see them this soon. And I think it was over $20 per pound, you know, earlier today. And, you know, the highest point in nickel that I think was $24, and that's about 10 or 15 years ago. And again, I thought we'd see it, but I never thought we'd see it within a week. And so when you see something like that, obviously the Russians have a huge impact on the nickel market. Nornickel obviously is a global company that has supplies. I think it's between 5 and 10% of the global supply, and it's most importantly on the sulfide side of things. For those that don't know, the global nickel market is around 2 million tons, you know, plus or minus a few 100,000. And the sulfide portion of that, or like the first class nickel portion of that, is about half of that. And, you know, so Nornickel makes up 10% of the global supply, but they probably translate more into 20% of the sulfide mix. So, you know, obviously, you know, the market is reacting to this change. I think the big question becomes, you know, we've talked about this before. People want to invest in junior companies because the metal price is going up. And the problem is there's so many other risks associated with junior companies that, you know, you can ride this wave and make some money on the metal price appreciation. But the other side to it is you still have to depend on management, the jurisdiction that the company is located in, whatever development work they're going to do. Like if they're exploring for nickel, they actually have to find it. If they don't, that share price will come right back down. So there's a plethora of other risks that are associated with the junior companies. Typically, in my view, if you're bullish on a metal, you know, you buy the metal, which isn't easy to do when it comes to like some of the base metals. But there are some pure nickel producers that I think where you could probably get some good leverage off the nickel price and maybe not take on as much risk as some of the juniors. But definitely, like you said, there's risk that comes with these huge spikes. And I really wonder if it's sustainable. You know, the market is pretty amazing at leveling itself out. And so, you know, a big price drop from here may even be compounded with the juniors that, you know, people sell off and get scared. One other thing that I would say is, well, I'm very bullish on the metals, and I think the metal price appreciation is good. In the interim, I think it'd be interesting to see what actually happens with the market in the next couple of weeks leading up to the Fed interest rate announcement mixed in with this war. Typically, you know, the broader market is down 1.5%, or they were before we were talking. Typically in these market meltdowns we saw in 2020, the rest of the market goes with it to a certain degree. And in March 2020, we saw the whole thing kind of collapse. And then gold did come out of it and probably led the way for the most part. And then the broader market recovered. So my other point is this, is that, we could see in the short term a big correction across the board. And then that leads, to this next big hike across the board across the commodities, but it's hard to say which will come first. And for me, I'm basically fully invested in the companies that I think are the best, anyways. And so, it's interesting to follow this kind of stuff, but I tend not to react, either way.
Brian, in my portfolio, and I believe in your portfolio, it's similar. The foundation is physical precious metals within my own control. And after that, I jump right into speculation. I don't have any blue chip stocks whatsoever in my portfolio. I don't even have really blue chip producers in my portfolio. It's all speculative and a ton of warrants that hopefully someday, maybe in the next 3 years, will be worth something. So I bring that up to say, when you see grains go crazy, when you see fertilizers go crazy, when you see oil, even like the guy across from the pump when I'm pumping oil this last week makes a comment to me about the oil price. Like people are really starting to get ticked off and they're starting to get a little worried because things are costing so much. Does it cause you to rethink your weighting of physical precious metals in your portfolio?
Sure it does. It's one of those things that it's a constant balancing act, I think. And it depends on what's going on in the world. Like if you would have asked me last year, I would have said, yeah, you know what, as a percentage, I'm pretty comfortable with the amount of physical precious metals I have. And maybe the other point is where they are, that's a whole other conversation. But then you get into the context and what's kind of happened in Q1, especially, I'm Canadian, what has happened in Canada, regardless of political ideology, you have a government that, froze assets, bank assets of people because of their ideology. And what that says is that any government at any time can freeze your electronic assets. And to me, it's pretty scary, even though if you would again ask me last year, I would have seen that coming, but I was still more comfortable because I think it wasn't actually happening. And then it happens. And then I say to myself, wow, like I should probably have more of my wealth outside of the system. And here's the thing. I think that a lot of precious metals investors probably think the same thing. But, we are still, the precious metals market is so small that we're well ahead of probably 98% of the population out there. And that's not necessarily a good thing, but in terms of price appreciation, I think there's a huge potential for those prices to move once people start realizing, as you said, these commodity prices are going up. The inflation that we saw, I think, again, last year, if you would have asked me, I saw some of the reasons why people were saying the inflation was transitory. I could see some of the deflationary effects, and I wasn't sure on how that was going to balance out. But I did see kind of both sides. Now, with what's happened with the war with the Russians and the Ukrainians, I think that more supply chains are going to be decimated, and I don't know how they repair themselves, especially in this world we're living in. It's going to take some time. So I'm more convinced than ever that we're going to see higher prices ahead, and whether that's gets ramped up really quick, or whether we just keep on growing at 7 to 10%, and that's CPI, which is a terrible number. But it's still double-digit inflation is significant, and it has the potential to destroy a lot of people's wealth. And again, I think that people are going to flock back to precious metals. And I'm sure, everybody who's invested in precious metals will hope or wish they had more as they see that price go up. But just remember that you're well ahead of probably the 98% of the people out there. And your wealth will be protected to a certain degree. So
there's people that listen to this show from all over the world, but you and I are based in North America. You're in Canada. I'm in Michigan, and I want your perspective on investing in Canadian or North American mining companies that have projects or production in Russia. So, for example, we saw Kinross, and they shut down their Russian gold mine, which was a huge chunk of their production. So the value of Kinross is going to drop dramatically. And just with whether you buy the full Western narrative about Putin and Russia or not, just the force of that narrative and the ESG requirements and, oh, you're doing business in Russia. Oh, your projects are in Russia. Oh, you're too friendly with the Russian government. Just a lot of companies will not want to fight that narrative. And so they just won't go to Russia, or they're shut down their Russian projects. What risk is there from an investor standpoint? Now, we're not political commentators, but from an investment standpoint, what risk are in Russia? Are you just complete avoid at this point?
There's definite risk in Russia, 100%. That said, there's some companies that are going to be selling at a discount because of that exposure. Now, I would say a lot depends on your wealth and when you need to realize a profit. I think for people that have a lot of money, have a long time horizon, the risk is probably it's probably overblown to some degree, because those companies are selling at such a discount now that there is opportunity there. But the other side to it is, who knows when this thing is going to be finished? And even if the Ukraine portion or the war is over, what sanctions are going to be held after? What that part of the world is going to actually look like. And I think there's so much opportunity in the rest of the market. To me, anyways, it's not risk that I'm looking for. I think you can take on jurisdictional risk in other countries and get a discount to value, and not have as big of question marks, because I think the question marks surrounding the Russia specifically are quite big, and they could be potentially quite severe. So unless you have a big pocketbook, a big portfolio, and you've got the ability to, have a long time horizon, I think it's something that you want to stay away from, at least right now, until there's maybe a clear picture of what's ahead.
And how does this affect you? You're not a trader. You invest for fundamentals. You don't invest for the commodity price. You've made that clear in over several years. You've said that multiple times. But when you get a spike like this, like a 60% spike in nickel in a day, do you trim a position and then buy it back with the expectation you're going to buy it back? Or do you play that a little, Brian, as a swing trader?
Honestly, I don't have a set guideline for it. It's so situational right now. It sort of makes me nervous but I do see both sides of the play. Like, I can see how the nickel market is absolutely going to be affected if Russia's cut out of, the global system. The other side to that is, I've seen how markets can react and what can happen when metal prices spike, and the market is tremendously efficient. So, maybe it doesn't happen this week or next week, but there could, nickel seemingly comes out of nowhere and enters the market and evens things out. But for me, again, I would sell if my company went up 20 or 30% and it was based off nothing but the metal price, and I had questions about the metal price, I probably would take some profit. I'm very apt to take profit. That's one thing that I've learned, is that you need to be able to sell. It's probably just as important as where you buy. And the biggest mistake that I hear from my readers in general, like when I'm talking to them one-on-one or just general questions I get emailed to me, people make mistakes on the sell side. They hold up and they think it's only going to go to the moon, and then they follow it all the way back down. And unfortunately, I think that the general retail investor is more apt to sell at the bottom than at the top, which is unfortunate, but it's kind of how it goes. Okay. Yeah.
And you've shared that about how you believe bag holders are the retail investors almost all the time.
For the most part, yeah. Yeah.
You went to a virtual conference last week, the Red Cloud pre-PDAC conference. And for those that don't know, the PDAC has been historically the world's largest mining conference, held about the first week of March in Toronto, but that got pushed back to June because of everything that's going on. But so this pre-conference, what were some of your key takeaways, Brian?
What I would say, none of the companies were upfront about it, but I would say, and again, it's the timing of it is kind of interesting. Like, it's right before this big push this week. But I think money is a little bit harder to come by than I would have necessarily thought, considering what the last month has looked like.
For all commodities, not just gold?
Yeah, well, and it was mostly gold companies that I was talking to. Just out of the interest, the meetings that I picked, it was mostly gold companies. So a lot of them had lower treasuries than I would have thought. And in my view, with kind of the work that they were talking about, they absolutely needed to raise more money, but they hadn't. And so I thought that was an interesting point. The other side to it is I saw a lot of like marginal deposits that are going to begin to be promoted. And, those can be good. Like in a rising gold price environment, they do give you a lot of torque because, a $100 move means that much more to a company that's right on the margin rather than a company that is profitable at, $800 gold or has a $800, all in cash cost. So I think the investors are going to be seeing more marginal companies, and of course that makes sense. And that's what happens in the bull markets: is more and more companies are created, and these marginal companies come out. But if you can play them right, and again, you know how to buy and sell, and you're comfortable with it, I think there's some opportunity. But I think you're going to want to make sure that you're in the bull, where truly are in the bull leg, before you again take on the risk of owning a marginal company. Otherwise, you always want to stay to the best of the best. And
best of the best. That's a Rick Rule quote right there, right?
Yeah.
Okay. Last question, since you haven't been on the show this year in a solo interview. What did you learn? What's a key thing that you learned last year in the markets? Can you?
Yeah. No. I'm trying to think. So from a personal level, it still comes down to selling. And it comes down to still being self-aware and understanding the influences that are causing you to buy or sell or not sell. And I think I needed to sell more. And I'm talking about my personal portfolio here. I think I made decisions more based out of greed, trying to make something happen, and maybe didn't hold completely true to my roots. And that's why I always harp on a few points, because I've learned time and time again, my biggest enemy is typically myself. And I need to keep on looking at what's influencing my decisions and, standardizing that approach that I have, because that's what's made me successful. And other events can come into your life and impact the way that you see the market, the way you participate in the market. But if you can really standardize your approach, you'll be that much more successful, regardless of all the noise that's happening around you. And I think anybody can gain from that advice, but that's definitely something that I know that I need to improve on, and was definitely a big learning lesson in 2021 for me.
Excellent. And your website is juniorstockreview.com. Please remind listeners what they can find there.
Yeah. So juniorstockreview.com, write a premium newsletter. It's published on a weekly basis, and it's basically my thoughts on the market. I have a portfolio which I rank on a weekly basis, and it's got, entry prices and comments on all company news. And also I do videos with the companies that are in the portfolio, and it's another different way to consume the content of portfolio-based companies.
And as a way to sell your newsletter, what was your biggest winner last year? Share with listeners if you could.
Biggest winner last year was probably CanStar. The only problem is CanStar went up close to 300%. And then it got caught with the ending of the kind of blowout last quarter. And, a lot of the companies came right back. It's an exploration company with some great people, and they had some good results. But it sort of fizzled out right at the end. But other than that, Anaconda Mining was the best. And that was actually a 2020 pick that I closed last summer. And that was for around 325%, which is an excellent gain. But it was a 2020 pick that I closed out in 2020. So I don't know if that counts. But.
That counts. Okay. Yep. Well, Brian, always appreciate your insights. You've been doing this well over a decade. Thanks for coming on the show today.
Thanks for having me, Bill.